Hello, friends. I am CMA Deepanshu Jha, and let's understand the new income tax rules for financial year 2026-27. With the start of a new financial year here in India, a whole wave of new rules is kicking in. And believe me, they're set to change everything from your salary to how you file your taxes. So, in this explainer, we're going to break down exactly what you need to know.
For a lot of people, April 1st is just about pranks and April Fool's Day. But if you earn a salary, run a business, or really manage any money at all in India, it's a date you just can't ignore. It's the official start of the financial year, which means a whole new set of regulations are now active, and they are going to directly affect your wallet. So here's the deal. All those major decisions the government made over the past year, well, they're going live right now. And we're not talking about minor tweaks here. These are some pretty big shifts in your salary structure, the tax system, banking, and even what happens when you leave a job. Let's start with the one that hits closest to home, your paycheck. All right, first up, and this is a really big one for anyone with a salary, is a fundamental change in how your pay is even calculated. This new rule completely redefines the very structure of your salary package, what we call your cost to company, or CTC. This slide really shows you what's going on. For years, many companies would keep your basic pay pretty low, way less than 50%, and then fill the rest of your salary with all kinds of other allowances. Why? Simple. Contributions to your retirement fund, your provident fund, are calculated based on your basic pay. So lower basic pay meant lower contributions from them. But that's all changing. The government is now saying your basic pay, plus any dearness allowance, has to be at least half of your total salary. So what does this actually mean for your monthly paycheck? Well, in the short term, you might actually see your take-home salary go down a bit. Because with a higher basic pay, a bigger chunk of your money is automatically going into your provident fund. But the long-term benefit is huge. Your retirement savings are going to grow way faster, your gratuity will be bigger, and your whole Social Security net just gets a lot stronger. It's a classic trade-off, a little less cash in your pocket now for way more security down the road. Now, this whole push for a more structured system flows right into our taxes. The government is doing a massive overhaul of the entire income tax framework. We're finally moving away from that super old Income Tax Act of 1961 and stepping into a system that's actually built for the digital age. If you've ever felt totally overwhelmed filing your taxes, you are definitely not alone. The old system had literally thousands of sections and has been amended so many times over the years, it became this impossible maze for the average person. So the government's new goal is to simplify, go digital, and bring a lot more transparency to the whole process. And here's how they're doing it. Your income tax return, or ITR form, is now going to come pre-filled with a lot of your key financial info. Things like your salary, interest income, and any tax deductions will already be there. Your job is basically to just check that it's all correct and then click submit. It's a huge step toward making taxes easier for everyone. But, this move toward making things simpler also comes with much tighter scrutiny. The government is taking aim at one of the most common ways people have tried to dodge taxes: fake claims for house rental allowance, or HRA. For years, some people would claim HRA exemptions using, let's say, creative rent receipts. To shut that down for good, it's now mandatory to provide your landlord's PAN card details when you claim the allowance. This one simple thing creates a digital trail that makes it almost impossible to make a fake claim. It ensures only people who are actually renting get the tax break. But it's not all about cracking down. There's some good news for employees in here too. The tax-exempt meal allowance has been quadrupled, jumping from just 50 rupees a day all the way up to 200. It's a really welcome update that makes a lot more sense with today's costs.
And speaking of employee benefits, there's another change that's going to affect pretty much all of us at some point: changing jobs. There's a new rule designed to make that transition way smoother, especially when it comes to getting paid what you're owed.
Okay, this is a huge employee-friendly change. Under the old system, waiting for your final settlement could be a long and really frustrating process, often taking anywhere from 1 to 3 months. The new rule says that companies must complete your full and final settlement within just 2 working days of your last day. Now, it's really important to know exactly what this 2-day rule covers. It applies to your final salary and any money you're owed for unused leave. Your gratuity payment, though, still has a 30-day window, and your employee provident fund has its own separate system for withdrawal. Still, getting your main dues almost instantly is a massive improvement. All these changes we've talked about, from salaries to taxes, are all part of a bigger push toward digital. So let's turn to how our digital financial lives are changing. The focus here is pretty clear: boost security to fight fraud, and streamline how we prove who we are. To make our digital payments safer, two-factor authentication is now mandatory for all transactions, including UPI and card payments. This just means a single PIN isn't good enough anymore. You'll now need 2 layers of security, something you have, like an OTP sent to your phone, and something you know, like your PIN, or even something you are, like your fingerprint.
All right, this next update is absolutely critical. It's the mandatory linking of your PAN card and your Aadhaar card. This is a really foundational step in the government's plan to clean up the financial system by creating a single, verifiable digital identity for every single taxpayer and weeding out duplicate or fake PAN cards.
And they are not messing around with this one. The consequences for not doing it are serious. If your PAN isn't linked to your Aadhaar by the deadline, it will literally become inactive. And an inactive PAN means you won't be able to do most major financial things, like open a bank account, invest your money, or even file your taxes. On top of that, your Aadhaar is now officially the master identity document. This means if you need to make any changes or corrections to your PAN card, you have to fix it on your Aadhaar first. This does streamline the system, but it could also slow things down if your Aadhaar itself has mistakes that need to be corrected. And finally, let's look at a couple of quick changes that will impact anyone who travels by road or by rail. This just goes to show how this push for formalization is reaching into every corner of our lives. If you're a frequent highway driver and you use a FASTag annual pass, you're going to see a slight price increase. The cost is going up from 3,000 rupees to 3,075 rupees. It looks like the strategy here is to make small, regular inflation adjustments each year to avoid one massive price hike down the line that would cause a big public outcry. The rules for train ticket cancellations are also getting a whole lot stricter. Before, you could get at least a partial refund even if you canceled just a few hours before the train left. Now, if you cancel your ticket within 8 hours of departure, you get 0 refund. This policy is really designed to stop people from booking multiple tickets and then canceling at the last minute, which leaves seats empty and makes the whole system less efficient for everybody else. So, when you connect all these dots, the salary changes, the new tax system, the digital ID updates, and even these travel rules, a really clear picture starts to emerge. Each of these regulations is a piece of a much larger puzzle, and it's all pushing India toward a more formalized, a more transparent, and a more digitally connected economy. The goal is obvious: increase tax compliance, reduce unaccounted for money, and build a stronger social security system for everyone. But it also brings way more scrutiny and maybe a little less flexibility. So it leaves us with a really critical question. As every single part of our financial lives gets pulled into this new digital framework, are we truly ready for both the incredible benefits and the new